Okay. Welcome back to Introductory Accounting Info. Today we want to look at the preparation of the bank reconciliation statement. So we're given a question that we have here, which is question 2, and it reads the information below appeared in the books of Ranchina traders. Then on the first point, make the supplemental entries in the cash book on 30 January 2017. And the next sentence, close off and balance the cash book on 30 January 2017. And then part 2, prepare the bank reconciliation statement on 30 January 2017. So according to this video, we are only going to be concentrating on the preparation of the bank reconciliation statement on 30 January 2017. So you're given the information that you are given that is going down from information 1. Let's try to see where the information is ending, which you need to go through before you answer the question. So going again to the next page, you see that we also have, we don't have anything on the next page. Let's try to see. Information is ending on information 2.12. So you are supposed to go through everything in terms of the information that you're given there. So obviously, now we go to the other section and see what we have. So this is what we have in terms of the other section. So the balance that we are going to start with is the balance in the beginning in the bank reconciliation statement. So we'll go to the question and try to see which opening balance do you give are you given for the bank statement. So I will try to go the information. Remember, you have got all the information, so you'll be knowing where exactly the information is. But if you go to information 1, it reads that the cash book and the credit balance of 68,400 rands on 1 January 2017, which is not applicable. Then part 2, a comparison of the bank statement, the cash book on 30 June 2017, revealed the following differences. Then 2.1, we are given the bank statement from Absa Bank showed a debit balance of 325,600. So basically, this is our opening balance for the bank reconciliation statement, whereby we are taking the opening balance of the bank statement. So remember, this is our bank statement. So you're going to start with the debit balance. Remember, it's a debit balance on the bank statement. So we're going to start it again as a debit balance on the bank reconciliation statement of 325,600. So we are going there. We are saying the debit balance, this is going to be your opening balance. It's going to be your opening balance. So here, the description that you are going to give, we are just going to say debit balance as per bank statement. And the figure that we are given is 325,600. And then from there, you try to find if you have got any deposit which is not yet credited, that you are supposed just to write beneath this. Then I will go there and trying to look for any deposit that was maybe omitted. You go down, you are searching for it, and if you come to information number, 2.8, you see that it reads the bank had not yet credited a deposit of 170,888, which was made on 3rd January 2017. So it's a deposit not yet credited of 170,888 that we just need to put in our bank reconciliation statement. So remember, deposits not yet credited, it's you are supposed to put them just beneath your debit balance, as your opening balance. In this case, it's a debit balance as the bank statement. So here we are saying credit deposit not yet credited, by the bank. So this is the deposit that you just want to put on the credit side. So if you come to the credit side, we've got the amount of 170,888. Then from there, you can now go to the question and go to the beginning of the question and try to find other adjustments which need to be put in the bank reconciliation statement. Then after that, we're given the following checks have not been presented for payment. So all checks not yet presented, it means they are going to reach the bank, and that is the assumption that is there. So we are supposed to put them on the debit side of the bank statement. Remember, whenever a check is issued, it is recorded on the credit side of the bank account or under the cash payment journal. So in the bank statement, it's an opposite entry. We are supposed to enter them on the debit side of the bank statement. So remember, anything that is on the credit side of the bank account in the ledger, that is under the cash payment journal. We are supposed to put them on the debit side of the bank statement, and anything on the debit side of the bank account in the ledger or under the cash receipt journal, you're supposed to put them on the credit side of the bank statement. So in this case, these checks, whenever we issue a check, we are supposed to it's supposed to be on the credit side of the bank account in the ledger, which is also on the debit side of the bank statement. So these all checks that we have here, they are going to the debit side of the bank reconciliation statement. So we're going to list them. We've got check number 321, check number 322, and number 323. So they are just outstanding checks. So we come here and indicate them as outstanding. Outstanding checks. So here we've got number 321, an amount of 15,000. Then we have number 322, an amount of 16,300. And then we have got our check number 323, an amount of 17,550. So these are the checks that we are given them. Then you can look for an adjustment beneath that. So if I believe that we are told that a check number 103 to the value of 20,100 was sent to ESCOM payment as a payment of our account, it got lost in the post and must be cancelled. So this check did not reach the bank, got lost along the way. So it was already in our ledger. So it needs to be removed in the ledger. So on the bank statement, there's nothing that we're going to do because it didn't reach the bank. So we are going to skip it, and it's going to affect our bank account in the ledger or our journal. So we go to the next one, 2.4. A check to the value of 161,988 withdrawn by Rashid Limited out of their current account appears on the business bank account. So it means there is a check of 161,988 that is appearing on the bank statement. It's not supposed to be appearing. So whenever we hear that a check appears, it means it's on the debit side of the bank statement. So to remove it, we go to the credit side of the bank statement, and we're going to reveal it as a credit. We are crediting a bank error which was debited. So we go there and indicate it as credit bank error. And the amount that we have is 161,988. And then we go to the transaction after that. Right, under that we are given that 2.5 means Absa Bank had debited their current account of Rashida with the following amounts. So these are the amounts that are appearing on the bank statement, but that they are not there in the cash book. In our ledgers, it's not appearing. So what does it mean? It means these are going to affect the ledger. They are going to affect the ledger. They are already there on the bank statement. So remember, the business can only get to know about these transactions when they get one of the bank statements. So it means they are not appearing there. Then we go to 2.6. 2.6 reads a current entry of 32,780 was in respect of a deposit that Rashid traders made directly into their account, but it appeared on the business bank statement. So we are seeing that this 32,780, it's a deposit, which means whenever there's a deposit, it goes to the credit side of the bank statement. So, but it was not supposed to be there. So we need to remove it by entering it on the opposite side, that is the debit side. And we're going to also say we are debiting a bank error of 32,780. We go there. We are saying debit bank error, and the amount that we have is 32,680. Then we can check if you've got any other transaction that is going to affect our bank statement. Then we go to 27. We are on 2.7 is the one. We are on 2.7 now, which means that the bank statement shows the two debit order of 23,900 rands in favor of Bijou Insurance as payment of the business partner insurance. in 9,705 in favor of CC. So these are debit orders. Remember, debit orders, they appear on the bank statement first before they appear in the cash book. So what does it mean? It means the bank statement is correct, but it's only that the cash book needs to be updated by putting these debit orders that is on the credit side of the bank account in the ledger, or put them under the cash payment journal. So this one is error that is corrected in the ledger. We skip it. This 2.8 is telling us about the balance that we have on the bank statement. This one 2.8 is telling us about the deposit which was not yet credited. Remember, we adjusted this at 2.8, 170,888 on the credit side of the bank reconciliation statement. So we're just going to skip it. Then go 2.9, the bank statement showed a monthly stop order for 4,020 in favor of Foshin. This was to pay the owner's shoes account. Stop order, we know that it appears on the bank statement first before it appears in what? In our cash book. So the business can only get to know about the stop order when they get hold of the bank statement. So it needs to be updated again in the cash book. So it won't affect our ledger. Then the last one is saying the next one, which is the last one on this page, is saying Vita deposited 12,000 400 rands directly to the current account of the business in payment of their account. So if it was deposited directly to the current account of the business, it means it's there on the bank statement, but it's not appearing on the ledger. It needs to be updated again on our ledger. So this is what we have. So what we need to do is to check again if you've got anything again that can we can use to again enter into our bank. And on 2.11, a check of 13,165 rands received from a debtor junior had been dishonored on account of insufficient fund. So in terms of a dishonored check, uh, we don't reflect it in the bank reconciliation because it was dishonored, it was rejected. So it's not going to affect our bank statement, but we can only adjust it in the ledger. So remember, whenever a check is issued, it's recorded in our books. It will be appearing on in the cash book. So it's already there in the cash book. That's where it's supposed to be removed. So the ledger is affected, but the bank statement won't be affected because it's a check that has to be removed from the books. So the check that can only be recorded in the bank reconciliation statement is a check that is along the way that is not yet presented. That's the only check that we can put in our bank reconciliation statement. But the check that is already rejected, we don't have to adjust it in the bank reconciliation statement. So this is what we have. That's what Absa Bank credited their current account of Rashida with an amount of 35,965 for a fixed deposit that matured. So again, this transaction is already appearing in the bank statement. So what is being affected is also the ledger. So it's not affecting our bank statement. So in this case, we can now go to our bank reconciliation. We've finished all the transactions. We can go to our bank statement, our bank reconciliation, and try to balance it. So this is what we have, and then you'll see that now we can add the total of the debit and the credit, and leave a space for a balancing figure, which is going to be our balancing figure. So we can just maybe put our double lines, add the total of the debit and add the total of the credit. You are going to see that if you add there, you are going to see that the total of the debit is going to be greater. So it's a total of 407,130. So we are saying 407,130, which is the total of the debit side, which is a greater total, which is also supposed to come on the credit side, 407,130. So if you now say it means our credit side is the smaller side. So we're going to say the total of the debit, which is in between the double lines, minus all what we have on the credit side. In other words, we are saying 407,130 minus 161,988. Then you subtract again 170,888. You do that. The amount that you're supposed to get is your balancing figure. It's supposed to come here as 74,454. And on the description, so remember, This balance is a debit balance. On our bank statement is a debit balance because it's a CD on the credit, but then the BD is on the debit. So it's a debit balance. But in our cash book, it will be a credit balance. It will be the opposite. So we are saying credit balance as per cash book. So it means after updating your cash book, we are also supposed to get the same figure, which is 74,254 being a credit balance in the cash book. Although it's a debit on the bank statement, it's supposed to be a credit balance in the cash book. So this is what we have, guys, according to this video. In the video, according to the preparation of the bank reconciliation statement. Let's meet again in the next video. Yes, for this video, I'm out.